Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest, and that's going to be Landon Swan, the co-founder of LikeFolio.com. Thanks for joining us, Landon.
Good to be here. Thank you.
Not to toot my own horn, but I send you guys topics for the following week. Last Friday, I sent this week's topics for you guys. I had Starbucks today. Today, we're seeing Starbucks downgraded twice, so perfect timing. I don't know if I had a premonition. I wish I could do that with the stocks I trade, but pretty good intro here on Starbucks. The stock downgraded at Oppenheimer and RBC, Landon, but what kind of data from LikeFolio are you guys seeing on this stock?
Well, I'll tell you what, Tom, I'm glad that you suggested it for today and not yesterday, because I don't have a super bullish case, but I am going to lean that way. So I'm glad that we're talking about this after a downgrade rather than before it. So when we look at Starbucks, it's actually, it's an interesting company because they, what LikeFolio does is we try to measure feet in the door or, through the app or whatever it may be. And they've got a lot of things going on that kind of weaken the LikeFolio signal, right? So what we're good at is measuring how many people are buying, but what they're good at, and they've shown this recently, is they're getting more dollars per ticket and they're decreasing expenses with digital fulfillment. So they've got the premium products working for the more dollars per ticket, and the digital fulfillment equals less expense costs. So their profits are going to be a little bit higher maybe than we might judge, or the revenue may be a little bit higher than we may predict. But I can tell you that the mentions of this company are actually starting to make a little bit of a ramp up. Obviously, that's going to be bullish case. And if they're doing these things that we're talking about, where they're increasing the dollar per customer and decreasing expenses, then that's going to compound on that. And so with the stock being, pretty much where it was back in March, I mean, it's bounced around a little bit, but I don't think investors are thrilled with the outcome right now over the last, say, 9 months or so, especially with these downgrades today. I would say that there is a case for a potential bullish move over the next little bit. It looks like they're starting to accelerate a little bit to the upside. They're getting some traction with customers. And then we've got some trends that are also working in their favor. So as you guys may know, not only do we track how many people are talking about going to or buying from a company, we also look at more generic consumer macro trends. And two that are important here, one is the demand for coffee, people talking about wanting coffee or drinking coffee. We're seeing that plus 12% year over year, which is a pretty significant move for what you would consider to be something that you would expect to be flat. And then the other one is not surprising, but also highly impactful for Starbucks, and that is returning to the office. We're seeing people talk about returning to the office at plus 37% year over year. And of course, if you're going to the office, you stop by Starbucks on the way there, maybe on the way home as well. So that's obviously going to be good for the company. So they've got a couple of trends that are working in their favor. And when we look at all of that, we look at the mentions being positive quarter over quarter, year over year, happiness pretty stable. I'd say we're not slamming the table talking about buy calls, but we are saying that this company is beginning to look more attractive than it was. And there's no better time to say that than right after a downgrade, because you're getting the shares on sale. So I love that here. But Kevin, I'd love to hear your thoughts.
Hello, Landon. Good to see you. And I've got a little update on you right now, Landon. It is 9 degrees in Chicago, and it was -2 this morning. Just a real quick update. The other thing about Tom, when Tom White says, I don't mean to toot my horn, you can bet the next thing out of his mouth is going to be him tooting his horn. But yes. I think Starbucks is one of these companies. And Tom mentioned, previewing this segment, that they've got 2 downgrades today. But these are, Tom, these are the most wet noodle downgrades that you'll ever hear in your life. They lowered their price target from $124 to $122, still $14 over where it is right now. So I get it that Starbucks is being downgraded, but I think with where we are in the world in terms of different variants and things like that, their drive-through capacity, their ability to give you coffee and pleasurable coffee with minimal contact is only going to get more and more popular over time, right? They've found themselves right in the perfect spot in terms of selling good, high-quality coffee without really human touch or human interaction as minimal as possible. So I think when you see a company like this and you get weakness like this and you watch the chart very closely, I think this is where there's opportunities in this name. Because, when you think about scale, or you think about a large company that still manages to be agile and move and adjust and move locations, and its ability to still grow, Landon, is pretty amazing. But your data, this is one of those times, Landon, I think when LikeFolio provides its most utility, where you've got a divergence here between the price of the stock and your mentions. Am I right to see that? Am I interpreting your graph correctly?
Yeah, I think you are. I think that's fantastic, and I agree that the downgrades are kind of ho hum, but they're still having a little bit of an effect on the company,
Sure.
right? I mean, so it's pulling back, and again, I'm not coming out here saying buy out of the money calls. We think this is going 200 or anything like that, but I do think that it's beginning to turn more positive than it was. It's starting to look good. It's not only from, again, the consumer talking about Starbucks specifically and being happy with them, but also the trends that are backing that up, returning to work and then enjoying coffee. And what's funny is, if you think about Starbucks 10 or 15 years ago, it was, you go there, you can hang out, they got Wi-Fi, you can get on your laptop, all this. And now they're like, let's get them in and out, let's get them through the drive-through, let's increase revenue. And that's fantastic.
Drive-throughs.
For both people, like the company and the consumer, they want their drink right now, and you get in the drive-through, order it as you're waiting in line, and you just pick it up, and it's right, and you go. So I think that's fantastic. Now, a lot of their growth, as you guys know, we focus on English-speaking tweets. A lot of their growth is in China. We don't have data on that, obviously, but we have other data sources we've been looking at, and I can tell you that it looks like the COVID concerns have dampened the growth in China. So there is a little bit of concern there. That's a big percentage for them. We talked about this the other day, the faster we can get through COVID and Omicron, then these are another one of those companies that's going to benefit from it. And talk about scale, they've got 34,000 locations and they're adding 2,000 this year. So they're huge and they're growing. And again, it's not just how many people they get in the door, but they're increasing the amount each person spends, and they're decreasing the amount it costs to serve that person. That's a recipe for success. And right now, I love the downgrades because that just sets up a better divergence like you talk about.
Yeah, the average ticket price continues to rise for them, Landon. I see that all the time when I buy Jenny Horn a coffee. Hers is triple the amount that mine is. I just don't get it. You can buy a drink for $10 there, and you're probably drinking iced coffee down there in Florida while we need it up here. But based on that, and going into winter, does your data ever reflect in Starbucks that they do better when it starts getting colder? Because, initially it's a coffee drink, right? But they sell a lot of ice stuff now. Do you see any divergence in data or a bump up as we hit maybe holiday season and it starts getting colder?
Not really. What's funny is I think that you could make a case that they're effectively selling a legal drug, and people are going to get it however they get it. When it's cold, they're going to want it warm, and when it's warm, they're going to want it cold. I think last quarter, their ice drinks were 75% of their revenue. So it's just going to move around, I think, with the temperature. It's going to be the inverse of what the temperature is, and people are going to get their fix either way. Yeah,
Kevin, do you have a follow-up here for Landon real quick?
Just one last thing, Landon, because you mentioned, I think, what people don't really realize about this name, and that is the ticket cost, right? The rising ticket cost. Each person that goes through that store spends a little more money. And what can you compare it to? You should compare it to something like Netflix raising their prices from $11 to $12 or $11 to $30. Higher prices and lower costs overall. I mean, that is the magic bullet for a company like this. So people in the door is a great metric, and it's the key to success. But if you can get each one of those to spend more money, that's on top, that's good on top of good. And so this company amazes me in its ability to keep growing at the size of this company. Landon, just give me your final thoughts on what you think about their ability to lower costs and raise prices.
Yeah, I think that's the ability to do that is huge. It's the ability to leverage your customer.
Right.
You're getting more people in the door, and you're getting more from each one from an earnings standpoint. They report earnings, I believe, February 1st. So we got a few weeks before that. I think we should maybe
February 1st.
come back and revisit. If they were reporting right now, the LikeFolio score is only plus 16. So we're seeing a very early signs of what could be a nice little run. So, we'll see how the markets do overall. That's going to push the stock around, but we should definitely revisit in late January because they've got earnings coming up.
All right, great stuff. As always, Landon, appreciate it. And check your Twitter, buddy. I took a picture for you this morning at 5 a.m. Central Time. Give you a little bit of what we're dealing with weather-wise up here in Chicago. Appreciate it, Landon. Have a great weekend.
All right, thanks, guys. It's 75 degrees here. Take care.
That's Landon Swan, the co-founder of
LikeFolio. There it is.
Yep.
He couldn't do it.
Co-founder of LikeFolio.com.